Hi, and thank you for joining me today on Tea Time with Karen. I'm Karen Hoffman, Realtor with today's Sotheby's International Realty in San Carlos. Well, it's January again, and we're all thinking about tax. We're getting everything ready to file our tax returns, or we're doing tax planning for the coming year. So with me today, I've got Jonathan Senegalia from OnePoint Business Services, who is going to give us two top tips on tax savings on commercial and residential income properties. Jonathan, thank you for joining us.
Thank you for having me.
So, what are your top tips or your two top tips?
Well, the big tip is something called cost segregation. And it's something that every commercial property owner and investment property owner should at least explore. It's a major deduction. It's available to anybody that owns that type of property, but most people haven't heard of it because most CPAs don't offer it. And I'll explain why in a second. But the gist of it is, when you own a piece of commercial property or investment property of any kind, you are allowed to take a small deduction year after year as that property depreciates. So for a residential property, that deduction will come year after year for 27 and a half years, this small little trickle of money. But the IRS actually allows you to take that trickle and, rather than claiming it in small amounts, claim it all up front as one big chunk of money. The benefit to this is obvious. You now, rather than having, a couple $1,000s a year that you can't really use, you now get this big chunk that you can invest. You can grow that money. Not to mention the fact that that set amount that would have come will no longer be degraded by inflation, because you have the money now to grow it.
Okay.
Most CPAs don't offer this simply because they're not licensed to do so. It's not their specialty. We are an engineering firm, and you have to bring in an engineering firm to capture this deduction.
So, Jonathan, if you said you get 27 and a half years to depreciate your property against, so now you sell this property after 10 years, but you already got your lump sum.
Right.
How will that, is there penalties involved?
Let me just say this more generally. Everybody's tax situation is unique, and everybody's plan with their property is unique. So rather than me ballparking about what's that going to mean for this client or that client, because it's different if they decide to sell it after 2 years or sell it after 20 years, I'll just say this. We never do anything without the client's CPA intimately involved in the process. So this is not the kind of thing where we present it to the client and we're like, sign here, let's change your tax strategy. Instead, we make a detailed proposal with real numbers. Here's what this is going to mean for you. Here's your benefit. Here's our fee. Here's the plan. And then we loop in the client's CPA and allow the CPA to study that proposal, advocate on behalf of their client, ask whatever questions they want to ask, because the CPA knows the client's plan way better than we ever will. So once the CPA goes over all that information and basically grills us, if they want to find out more information, we'll provide it. And then once that's all out there, if the CPA says, you know what, yes, I think this is a good plan for you, I think it fits with your strategy, and the CPA greenlights it, we will do the work to capture that deduction.
And top tip number 2.
Well, another great thing that a property owner can do if it's an investment property is they can actually challenge their property tax bill. This is something that anybody can do, but most people don't, because they don't know.
On your investment properties.
Investment properties, yeah. Most people don't know that it's a possibility, but you can actually go to the county and you can argue that your property taxes are too high, that they've been overassessed. And if you win, you actually get a refund check from the county. This is one of the things that we specialize in as well. We bundle this up with our cost segregation service. If a client comes to us looking to get the big deduction, we will also offer to challenge their property taxes. The great thing about this is, if they win, they get the refund. If they don't win, there's no cost, because we only charge if we actually deliver savings. So it's something you should at least look at, right?
Yes, exactly. So Jonathan, tell me about OnePoint. It seems like you're doing very interesting work. So please tell us and how you can help my clients or anyone out there.
Well, our whole model is finding savings for clients that other people aren't going to find for them, and specifically property owners, but also business owners. So in addition to capturing big deductions for them, with the help of their CPA, we can also find tax credits for business owners. So there are tax credits available, for example, for hiring low-income workers, single moms, people on food stamps, veterans. So if a business owner is doing that, we can help capture credit for that. There's also tax credits for research and development, and we help with that. There are also ways to audit their merchant services. So we'll go in there and actually audit their credit card merchant, their workers' comp provider. We'll find any overcharges, mistakes. We can go back 7 years with the workers' comp, and we'll get those refunds turned over to the client. We only charge if we actually deliver a refund, so they never have to feel like they're on the hook for anything.
And you work hand in hand with CPAs?
Always.
Okay.
We never do anything without the CPA giving their green light.
Great. Jonathan, thank you so much for joining us.
My pleasure.
If you have any questions for Jonathan, his details are appearing on the screen. Give him a call, or you can always contact me via private message, and you've got my details. And I look forward to seeing you with Tea Time next week. Have a great day.